Hey, welcome back everybody, and we're here again. It's the Mohawk Forex team and true scalping. That's our motto. We're going to be scalping the news in the next 10 minutes or so, and then the New York Open. Let's have a quick look at what we're going to be looking at today. It's the housing starts, the building permits. Of course, this is all inflation data related, so we should see some moves pre-market, maybe counter trend, maybe with the trend. We'll wait and see what the move is. We already had some nice trades on the UK inflation news, and we had a little trade on the euro inflation news as well on DAX earlier this morning. So now we're switching to US-30. We're trading a small account, just a couple of hundred. So just again, for people ask me to try it out, so I was doing a couple of thousand, 1,000 for the last 2 weeks. Now I've dropped down again to a couple of hundred, so we're going to be cautious. We've got to do the smallest lot sizes, and obviously we can't do it multiple positions, but it's all about trying to catch the move and staying green. So we'll have a go at trading this in the next 10 minutes, and then we'll do the open as well, and if there's any other scalping in between, we will have a look at it. And we're on our 1 and 5 minute charts, and as you can see, US-30's taken a bit of a drop, formed a nice double bottom. W pattern was kind of forming here, so we'll see what this news event brings up. And then we're looking at cable as well. Our cable trade, we grabbed a few pips this morning. It didn't get back to the Asian line, but we managed to go in there. I set this as the potential target, 50 pips. Didn't do it. We grabbed 10 and got out of the trade because I saw it reversing. So it was just a quick, caught that spike to here, which was, yeah, look at that, 12 pips. I took 10, and that was the end of that trade. Yeah, 618 on the fib. Potentially there's going to be a reversal. And it didn't pop back. There was a buy signal here, but as you can see, RSI was red, so I left that alone. So I just traded that little trade, and now we're going to wait and see if we get a pop back up to the NY line later on. Here's the news that we're looking at in the next few minutes. So pound is, there you go, there's our target obviously here. We want to see it bounce out the bottom of our bands and have some momentum as well on our Hankin-Ashi candles as well. So we'll wait and see while this news plays out, and we'll come back to cable. So US-30, I'm just going to log in onto my broker. Let's make sure I've got the smallest lot size. Yep, so I'm probably going to be able to take one position on this. And if it's not a big enough move, I won't trade it, as simple as. But when you've got a small account, you've got to really fine-tune and pick your trades. So if it doesn't look like a move, then we won't take it. But depending on this, I mean, it's looking to be lower on the housing starts and lower on the building permits, so a slowing down. -2 month on month is actually climbed, and actually housing starts month on month is up. So year on year is down, but month on month could be up. So a mixed bag, but we'll see what the result is. And like I say, just because it comes up green and red doesn't mean you buy or you sell. People often fall into that trap. This is just the mathematics. It's telling you, that figure is lower than this expected figure, but that doesn't relate to how the markets might move. It's an easy mistake to make if it was only that simple. Green can mean sell, red can mean buy. It depends what you're looking at. You've got to look at each individual thing. And the fact that we're pre-market and there's a lot of market manipulation and people like to be caught out, so the market can go the reverse as well. So we'll wait for the move, we'll wait for the result, then we'll wait for the move on US-30. See if we can dig out 10 pips on the trade. We'll plug into Bloomberg as well. They should print the news around about the same time.
change zero COVID policy, and as you just said on the show, it doesn't look to be likely very soon.
Let's have a look.
I mean,
We
to
have
be
got
fair,
literally
China has
5
been in a
minutes to
very
go,
weak,
so we're just keeping on
economic
price
phase
action
since
here.
the second quarter of this
We're
year,
at the
so
bottom
this
of our
is
fib.
not necessarily new. I think it's
Hanking on the
fair to
5 is
say,
down the bottom.
obviously
On
we're
the 1 minute,
seeing,
it's in the middle,
you know,
and that's what you want to see. You want to see one of these two, either one bouncing from a bottom or a top, and the other one at the same time ranging in the middle. That means you get a move. If they're both, you know, the same or the opposite way, it counteracts. So I like to see a reversal from here,
and to some extent also, if you look at
RSI pointing up, and then we could get a buy up to that.
The Chinese currency has lagged a little bit in terms
You know, you've got 27 pips potential there. Just going to take the yellow line off so we can see the actual move.
As far as the Chinese currency, yeah, but I think, you know, unless we're seeing a change in the zero COVID policy, it's really hard to change the view on the yuan.
Vasily Serebrikov of CBS, thank you so much for being with us. And Tom, I keep going back and thinking about your conversations with the IMF, the back office conversations, not necessarily those that are on screen. People talking about where inflation could end up and how it could be sustained in part because
got 5 minutes to go.
that really breaks the mode that we're really in right now.
Well, yeah, and again, I go back to the media loves y-axis analysis, change, surge, plunge, cratered, whatever. The adults are on the x-axis, worried about time, and what we've learned this year is transitory. Remember transitory? We were younger.
Yeah.
Okay, you know, we're not transitory anymore. We're out somewhere with a complete unknown into next year. There's guesses, but that's just what they are.
Well, and this goes to the Mohamed El-Arian point. At what point do some of these Fed officials have to give mea culpa or say we got it wrong or say something isn't working and we understand that we made a mistake in the parameters that we've been looking at? Right now, futures are lower. You can see the S&P down 19, 37.13. You can see the 10-year yield heading toward 4.1%.
The first 7 seconds.
The real yield, as Tom keeps mentioning, surging. Just did that for you.
Maybe they're still pointing down at the futures. S&P down, everyone's still looking down. So got to be cautious of any buys. As I said at the moment, got to be cautious of any buys. It's in and out. I've got a buy zone here, as you can see on the 5 minutes chart. Most of these signals were pretty good for little quick scalps. So the sell was bang on, that buy you could have scalped to there, the sell was bang on, that buy was okay, that sell was probably the only one. Unless you took it, you know, you took it as the candle moved, broke, and then you caught it on the way down. Again, I would just relate to the 1 minute when you're scalping that close. You can see there, look, if I put my line across it, the sell signal was literally that candle here on the 1 minute, and obviously when it's the bottom of the channel, yeah, there's a little drawdown, a little scalp here, but usually I want to be middle or the top if I'm selling, and middle or bottom if I'm buying, when I'm looking at any of the signals that pop up. Obviously when price gets outside, I'm looking for the buys, I'm not looking for sells, or, you know, at least until the 50 moving average, and then watch it respect that as it's done here and bounce down again.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35%.
Here we go, 50 seconds. So good luck, everybody. Like I say, this is not financial advice. This is just a bit of entertainment for my own enjoyment. I'm not telling anybody where or where to enter. I'm just giving you kind of what I like to do. And definitely do not follow me. Is all I say.
Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse.
Like I say, let's see if we get a move or not
also
on
allowed
this.
Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
10 seconds.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Lots happening on Wall Street.
I think Jay
Waiting for that pop.
that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and
Building
insights.
permits high is higher 1%. Wow. -8, so low on the housing starts. Permission's been granted better, but opposite. It's a split result. Yeah, very, very interesting result that. Wonder if we're going to get a trade on it. Let's have a look. Let's watch US-30. It's a nice little drop. Yay, we got in. Brilliant. We did the one trade there and I got $10. Brilliant. There we go. So $10 will do. And again, this is just small scalping with a small account. I started with $100 yesterday. So that was a nice little sell. There you go. Just on that move. Let's move that so the home's used, as you can see. Now again, you've got to watch it. I was in and out because, you know, we're bottom of this Fibonacci here. Look, you can see the reversal. I want to be taking buys. I don't really want to be selling on this position here, so I'm just jumped in, got the green and got out. That's true scalping. That's what you got to do. You're not messing around with stop losses and all that jazz. By the time you've set it all, you've already missed the trade. It's just a quick scalp in, you know, $10, you know, on a $100 account, 10%. I mean, come on, you know, just quick. That took me literally 50 seconds. So that was a nice little result. Now we'll just see if we're going to get a pullback. I'm just cautious of any buys, like I say, especially on the lower time frames. 1 minute ones, so many fake outs. You can see there's quite a few little ones you can catch here, but that news looks bad.
Doesn't look like they have a lot of confidence, but they do have a lot of backlogs, and they are putting.
There we go. And that's what the news is saying.
I guess they will probably put some of those houses into the ground.
So just want to give you a sense. I don't know if you can attribute it to this data, but you're seeing the 2-year yield breakout now at the newest highs since going back to 2007, 4.52%. You could see the dollar gaining. You could see the opposite effect, and this is basically what's good for stocks is good for bonds. What's bad for stocks is bad for bonds. You're seeing losses deepen in the S&P lower. And Tom, this really speaks to what you've been talking about, which is basically how much are people looking at housing, the resilience there, not necessarily giving pause. 0.7% decline right now on the S&P.
It's there, and you see it in north of the border in Canada.
Yeah.
With once again a more persistent inflation as well. Michael McKee, on a global basis, 10.1%.
So our trend line still saying we're trend bar still saying we're selling.
This is a theme.
RSI is pointing down. Hankin is not in an oversold position.
That drifts away according to the guesstimates, or do we go?
Like I say, we've just reached the extent of the bands on the 1 minute, so I always look at that first.
Further distant, I should say.
Should really zoom in on it so you can see.
A big debate right now.
Yes.
A lot of people suggesting that there are forces out there that will bring inflation down, that we can only see them on the horizon, but they are going to start affecting the overall level of inflation. Others are saying, well, you know, the problem here is no longer the transitory stuff, which it's the
transitory.
Chris Lowe of FHN Financial this morning saying cyclical inflation is the hardest thing to get rid of, because the only way to get rid of it is
Pepper though, because it's so hard with just $100 or $200 account to scalp. It really is, because one mistake and bang, you can blow your account. You know what I mean? And you know, you're going to get stopped out by your broker, regardless of you setting a stop loss, automatic stop out on your account. So you've got to just pick and choose, be accurate, get in, get out, don't be greedy, don't go for this any 1.5 to 1, 2.1 ratio that people pull out of their ass that has got no relevance to the market at all. You know, I've always said this to everyone in the group. The market doesn't owe you a 1.5 to 1 risk to reward ratio or 3-1 or your risk. You know, you can set it and hope, but I understand why people do it because of what they're risking, but that doesn't mean you're going to win 3 times the amount or you're entitled to win it. So, you know, I think that is always, maybe on swing trades it works, but on scalping, overall you always end up losing. That's my experience anyway, but each to their own.
They accept that that's a possibility. The idea that
small wins, consistent small wins is the way, and obviously same consistently cut your losses if something's, you know, gone, if you've entered the wrong way.
There's no more forward guidance here.
Good to have Michael McKee with us today. Always a Fed speaker. Michael McKee running all of our economic coverage as well. He is director of White House National Economic Council, which means he is mum during the political season, and we are
see our volume is below the 30s. That's no good. We haven't got a green hacking, so there's no buys. Ignore the green candles on here. I mean, you can go to hack and actually candles on the main one, but the whole idea about having this extra indicator is just you don't need it. It's telling me we're still ranging, and then we're going to sell a bit more yet. Now we've got a green. If it holds,
is the most middle class representative boss of his generation.
It's going to go back to where it was at the
what's going to be the reset
start, maybe
Democratic Party economic policy for the middle class coming out of this election?
Well, look, I think you're seeing it in real time. As you said, Joe Biden ran for president based on...
And the hacking's got to be bigger than the one previous one as well.
Economic recovery, as he says in very practical terms, from the bottom up and the middle out, not from the top down.
No, not real any momentum at the moment.
If you look just, for example, at what's happening in American manufacturing. Across this country, nearly 700,000 manufacturing jobs created, and you're seeing company after company make investments that they're making a bet, a long-term bet to make capital investments.
Just doing a DOGE, 3 seconds, 2-1. We're going to go in.
Battery manufacturers. I was in Cleveland last week.
So again, when you see that morning star candle, you know, weak.
And innovate, and that's going to pay.
I expect this. That's why I only trade US-30 on news events pre-market, because the volume is lower, obviously.
Strategic political reserve. We all get the politics of it, and that you took hydrocarbon 101 at Middlebury years ago. Can you explain to me what the Democratic politics is of refilling the strategic petroleum reserve?
Will it get back to that 50 EMA? That's what we're after.
Yeah, you got it. I do have to clarify that I'm a Red Sox fan. It's important.
And that this supply demand zones, which is just set a TP about there that you can see. So that's ideally what you're looking at.
Several months ago to release 180 million barrels and provide that stability to the market. He's making good on that commitment with a 15 million barrel release today. But second, he's announcing a plan and a policy to refill the Strategic Petroleum Reserve when the price of oil falls to about $70 a barrel. That makes sense for 2 reasons. One, protecting taxpayers. We sold oil out of the SPRO at a higher price, at around $90 to $100 a barrel. Repurchasing at $70 a barrel means we can actually strengthen the asset. We can get more oil back into that national reserve. And second, it provides some certainty to the industry, because we will have the authority to both purchase when the price comes down to 70 and also enter into contracts to purchase at around $70 in the future.
But one thing that's very difficult is that we're not talking about the present and what releasing more from the Strategic Petroleum Reserve will actually do to bring down prices not only of gasoline but diesel, of the refined goods that we need. How much are you thinking about additional measures to try to shore up both the stores of diesel as well as lower prices? Are you talking about banning exports, for example, to Europe?
Well, first, let's look at where we are. We have, since the beginning of the summer, seen gas prices come down about 30%. They're down about $1.15 a gallon at the pump. We've seen natural gas prices come off from a high of almost
see how it just
to
reverse. As soon as you see this again, that's why I love watching price action, getting to learn. When you see two candles like this, yeah, there's a high chance of a reversal. And it's just dangerous to take a sell because you don't know how far it's going to go for. It just ranges along nice and long till the open. Now I should put my line in for the open.
The announcements today, I think, are going to help on that front. But also addressing places where we have.
But okay, but that has come down. It hasn't come back that much. But diesel has not come down, and that affects the price of everything. And perhaps people don't see it and breathe it the way they view gasoline prices. But this is affecting very much the heating costs as well as the shipping costs, and has raised questions about banning exports at a time when Europe is flat on its back as well. What's your view?
Absolutely, we're very concerned about inventory levels. For refined product, diesel in particular, particularly across the
You can see we're down the bottom on the 5 minutes and we're ranging on the 1 minute. So we'd like to get a nice buy up to that level, maybe for the open, maybe in 20 minutes when we get to that 2 p.m. We'll just keep watching. So we'll look at cable. Again, on that result, the dollar was weaker. So, sorry, the dollar was stronger, and so the pound sold. So we got a little drop there. There was the result. And yeah, you could have got about 5-6 pips maybe on that one if you traded. Going counter trend, like I say, it's ranging green to red to green. Look, so
real quickly, what's going to be the trigger point to understand whether it is time to look at exports?
Check my settings on that as well. It's all part of our AX system.
Or articulate a decision before the president has made it, but the president's going to continue to do what he has done over the course of the last several months, which is assess the market, understand where we are, and understand the tools that we have and the impact that they'll have. Today, he's announcing a release from the SPRO, but also importantly, this repurchase plan, which is something that industry analysts and others have been calling for some time. We think that this will make some difference. We're going to keep at it, keep a close eye on these things, with an understanding that we have these tools on the table and we'll deploy them when it's in America's interest.
Brian Deese, Director of the White House National Economic Council. Thank you. Tom, all options on the table, potentially even including banning exports as we head into winter with very low stores of diesel.
I was with Spencer Abraham. This is a long time ago on one of the energy battles. I can't even remember the details, but it was where
I've got to change my settings on that. Ooh.
And I can't emphasize enough, a la our feed, thank you for watching and listening worldwide. Is this White House in the commodity trading business of gaming prices?
Basically,
I've never heard what I just heard.
Saying here's the floor, here's the ceiling, and we're going to work with it with the battle that we've got, although it's really a refining story as much as it is a strategic petroleum reserve story. Right now,
waiting really for that bigger move, like here, it came into the zone, 1, 2, and then the third one, you were good to go.
WTI, $84 a barrel, excuse me. Coming up, Tony DeSpirito
came out the zone, 1, 2, 3, you good to sell. Usually I like to wait 3.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russian President Vladimir Putin has ordered the extension of martial law in 4 occupied zones of Ukraine and stepped up security in nearby regions.
Again, nothing we can scalp here that's really worth paying the commission for at the moment. We're just ranging along, waiting for that open, which is going to be, there we go.
Hong Kong Chief Executive John Lee has unveiled a plan to woo back foreign talent and ease housing woes. It's an attempt to revive the city's status as an international finance hub. Lee announced he would cut property duties for non-permanent residents and relax visa rules. Years of tough COVID-19 policies and political turmoil triggered a brain drain in the city. Ukraine's military claims 13 drones made in Iran were shot down in the southern Mykolaiv region overnight. Now, it happened as officials have reported more attacks against the country's infrastructure. President Biden's administration is pressing Congress for new authorities to speed up production and transfer of weapons for Ukraine. Rolls-Royce has completed the first step toward fulfilling its promise to sell only electric vehicles by 2030. On Tuesday, it unveiled the all-electric Spectre. Rolls-Royce Motor CEO Torsten Müller-Otzfos tells
Crazy,
Bloomberg
electric
that
Rolls-Royce.
margins per car are untouched and says Rolls-Royce will be very profitable. Global news 24 hours a day on air and on
Cable.
Bloomberg.
I mean, that move back to the
2,700 journalists and
NY
analysts
line's going to
in more than
be
120
look at that, like
countries.
52 pips
I'm Liz
again.
Mateo. This is Bloomberg.
But it's just the news. It's killing it at the moment. Well, nice little pullback there. There was a nice entry. Volume was high. Look, that was nice. Could have grabbed that. Little move, and then that was it. Really, there wasn't really anything else. There was a little one there. It just peaked above, but really, that was where you wanted to enter. That green candle there, and catch that. Everything else is a downtrend. We're just going to sit on our hands. There you go. Look, there's the down again. Look, see, hit that. I'm say when you start seeing this red, green, red, you just leave it alone. Just wait. Everything's red. Look, RSI is still ranging around. Look at the markets. And we'll go and get a coffee in a second and wait. We'll see if we get a trade in 15 minutes.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, you know, we have a unique way that we look at big new investments. And I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire it quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs. You know, and the ultimate output for a company is share price. You know, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level. And that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into the limitless possibilities. Before you change the world, Bloomberg.
So US-30 is still doing a nice range. Our fib still down the bottom, so nothing is happening at the moment. We're looking for this move back to this below the supply line here, which we've got set on the 1 minute. That's what we're looking for. We can either scalp once we get above this 50 moving average. That's the safer one, or wait until we get a definite move on the volume, but it's flat, as you expect. Pound has been the same. Right, I'm just going to go and top my coffee up. I'll be back in literally 2 seconds or so.
Giving a paper playing footsie with the Dow. Really looking forward to that. This is at a symposium in Scotland on the history of the Dow Jones Industrial Average. Thrilled that John's doing that this morning. This is a joy, because when you go to Boulder, Colorado, you know that the Zoomies are down to Colorado Springs, and they're the real deal. Out of the United States Air Force Academy, an actual pilot running an airline, the chief executive officer with United, the pilot, Scott Kirby, joins us this morning. Scott, I got 18 questions from viewers that have everything to do with the United Lounge, this, that, and the other thing. I want to talk about the ratio of business class to economy fares. I follow one United fare, and it's $6 for every dollar of economy. I've never seen it. Where is business class in 3 years?
So thanks for the intro, by the way. That's a unique one, and I like it. But business travel, business class demand is really strong in economy, but it's even stronger in the premium cabin. United has more premium seats than any other airline in the country. One, long-haul business demand has mostly come all the way back to Europe, at least. It's even stronger than it is domestically. It's harder to do calls with someone in Europe. But the other trend I think that's huge is there's more premium leisure demand, and really that is enabled by hybrid work. Hybrid work makes every weekend a potential holiday weekend, and there are people that will go to Europe and they'll work for 1 or 2 weeks in Europe, and they work during the day. They go out late at night with the French or the Spaniards. By the way, that's the only way I could possibly go hang out with the French and Spaniards if I stayed on East Coast time. And we see like this. I think it's a permanent step level increase in demand, both for weekend travel, but also for premium demand.
To the volatility, the cyclical nature of your total return of stock, is the new persistency of cash flow from business class enough to give you a more persistent cash flow on your financial statement?
Well, look, I think we'll still have volatility. We'll still be affected by the economy or short-term in the fuel prices. So it won't eliminate cyclicality. But what it does is more important, which I think it raises the level. So the lowest period of revenue will be higher than it was before, and the highest period will be even higher. It doesn't take out the cyclicality, but it does raise the bar across the board. It's just a new permanently higher level of demand.
But to that point, Scott, we've spent the better part of the last 3 hours talking about whether or not we're seeing a softening in demand, which is what policymakers are trying to engineer to bring inflation down. Inflation, which in some sectors of the economy means people are just spending less in certain areas. It does not seem that it has hit air travel yet. Do you expect that the demand deterioration is going to come? And will that ultimately mean you don't have the pricing power to keep fares high?
Well, I think the slowing economy and or a recession are going to be a headwind to demand, already are a headwind to demand. But there's 3 trends in aviation that I think they're currently more than fully offsetting. I think we'll continue to. One, we're still in the COVID recovery phase. Japan just opened last week. No matter what you think business travel is going to ultimately get to, it is going to go high, almost certainly going higher from here. So we're still in COVID recovery, unlike most industries. The second one is this hybrid work making every weekend a holiday trend. September was the 3rd highest RASM month in the history of United Airlines. That is an off-peak month. What happened during September, and we saw it even earlier, we're seeing it in October, by the way, is going to be better than September, so it's going to move to 4th place, is people are now able to work remotely for 1 or 2 days. So they can, instead of being tethered to their desk at the office, they can leave Wednesday or Thursday, go somewhere, work remotely for 1 or 2 days. We're taking extra trips. That's a trend that's not appreciated by the market yet. It's unique to aviation. But it's offsetting those economic headwinds. It's a tailwind that's offsetting it.
Yeah, and Scott, we call that doing a John Farrow at Bloomberg Surveillance. Why don't you continue, Kaylee, with Mr. Kirby?
Well, that's on the demand side, Scott, but there also is the fact that you are still constrained on the supply side. Capacity is still more limited, and part of that has to do with the labor equation. Can you just give us your best estimate as to whether or not you're ultimately going to be able to expand capacity again, or is this a structural labor issue in the air economy, which is going to stick around?
So first, if you're an airline investor, it would have been the third and maybe perhaps most important trend that while there's a really strong demand environment, supply is going to be constrained for years to come by artificial factors. Now, it's less of a constraint for United because we're at the high end. We're the top of the funnel, top of the pyramid,
right?
For people wanting to be pilot, but there's not enough pilots in the industry. That's not the only constraint. Boeing and Airbus are way behind, and the supply chains are way behind on their ability to produce new airplanes. Air traffic control saturation. There's airports in Europe and other places that are full. These are like 4 or 5 year problems. Even if you start fixing today, multi-year problems.
Scott, when you're in New York next time, landing at Newark and hopefully landing at JFK with that battle, I want to talk about the landing gates and all that. But Mary Schlangenstein, who's our ace airport reporter, says if you don't ask Scott about Boeing 737-8 over to a 7, and they're going to add 12 more seats, and they're going to take this wing and add it on. Scott, this is not confidence building with the redo of the Boeing MAX. I mean, it's not confident building. Do you have confidence that you guys in the FAA can get together to get that plane up in the air?
Yeah, well, I think you're talking about the MAX 10, and hi, Mary. Good to hear from you virtually. But here's what I think about the MAX 10. First, for United, if somehow the MAX 10-7 don't get certified under the current standards, our plan is we're going to convert some of those MAX 10s into MAX 8s and 9s. And our large airplane, we're going to order more Airbus A321s, and that's going to be our large airplane. And Boeing will compensate us for that. So for United, it's not really a big deal financially, but it's the right safety outcome. This is the most important point. It's just a different length of airplane. It's the same airplane at a different length. And you'd never want to make 2 different cockpits or procedures for the exact same airplane. That detracts from safety. So I think because it's the right safety outcome, we will get to the right answer where the MAX 7 and 10 will get certified like the MAX 8 and the MAX 9. I think the more important point is a bigger one for the country, for the United States of America. Boeing is our largest exporter, high-tech exports, manufacturing jobs, high-paying jobs. And the question is about, are airlines around the world going to buy MAX 10s or are they going to buy Airbus A321s? And the real question is, it's the right safety answer. Are these planes going to get produced in Seattle, or are they going to get built in Europe and Asia and China? Look, I want both Boeing and Airbus to do well for healthy competition, but the right answer is the MAX 10.
Scott, we're out of time. We need to see you when you're in New York next time. Scott Kirby with United Airlines after a very strong earnings report, to say the least. Kaylee, this Boeing MAX thing won't go away. It's just been there forever, hasn't it?
Yeah, it's something we'll continue to follow, as with the earnings story more broadly, especially the impact of the stronger dollar that we're hearing company after company warning about. There's more on deck.
Futures at -22, Dow futures at negative.
This is Mark, and this is a car, a sofa, a bag. But since Mark has been trading with Capital.com, he sees a brand, he sees value, he sees an investment. Start seeing the world differently with Capital.com.
-139, the VIX elevated. We're looking at yields. You need to watch for higher yields. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of a solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
From New York City for our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow. Once again, yields taking center stage. Yields up, stocks down. S&P futures lower by about 0.6% as you see yields climb to the highest levels going back to 2007. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open with Jonathan Farrow.
Begin with the big issue, torn between earnings resilience and inflation concerns.
Resilience has been the key word.
There is some positive news on earnings.
They're actually pretty resilient.
Earnings so far have proven indeed to underscore that story of resilience.
The bar is low.
Companies have a lot of levers to pull and use in order to engineer better earnings.
Company earnings do not yet reflect the wider macroeconomic expectations.
You can have a weaker economic environment and actually a solid earnings environment.
But I do think downgrades are still coming to 2023 earnings.
Inflation was supposed to be moderating.
Now it looks like we're going into extra innings.
Cool, and we're back, right. And nothing much happened. Well, US-30 broke moving average. I had an alert on my phone for that, but reversed off it. Oh, nice coffee. Didn't quite hit that demand zone, so again, we'll wait for the open on that. Let's move that out of the way. Again, nothing's overbought. Look, again, if you look on the 5 minute, you can see that the candles aren't. Again, none of those are convincing. That crossed above the RSI, but it's not bigger than the previous 1, 2, 3. So it just shows you the momentum is not there. This might be, but it's got finished above the RSI. So that's what you got to look for, or what I look for when I'm using this. Otherwise, you're going to get this, like you see. From a true scalping perspective, you know, it's just dangerous waters. This. So look at cable. Again, still nicely down the bottom. Little fake out buy signal. Trend bar is green. RSI is not. So, and again, one line across that, and you can see on the buy signal, you could have jumped in on that candle there with it and use the 1 minute to get in and out, and you could have got, oh yeah, it was about 5-6 pips, 7-8 pips with the commission spread. So again, that's how you can use it. These signals pop up on the 5 minute. I just always refer to the 1 minute, and then if it jumped in, they could have just gone in on that, you know. It's got to be the right side of the 50 moving average, and again that went right up to the inner band. So, and then we pulled off it, so that's pretty good. Like I say, same as that sell. Look, the sell signal came there, and I wanted to took it because it was a green on the 1 minute. The buy signal, we just come on here. The buy signal there, look, is again iffy because it's just below. You could have gone in and scalped to the moving average, but again, you want it to be above the 50 moving average. So again, that's one technique you can use. And on cable, I don't have the Hakanashi. I don't need it on there. It's just because again, I'm trying to hold for longer on pound dollar, so you can cover the spreads and commissions. That's the only thing scalping on a small time frame. You'll end up not making any profit unless you're going to go for that 10 pip move.
This actually could be part of a longer term gaining cycle, so it's okay if there's some volatility on the downside after that.
Absolutely. I mean, I think we're going to be on this road.
Yeah, futures are down after a 2-day rally. So there's no kind of 2 p.m. move. It was kind of that. It was just nothing, just a range. It's just, again, we can put levels across this like we usually do. If you want to look for a breakout and say, look, there we go on the 1 minute, you're there. So you can just say, look, I'm not going to take a trade until price is broken one of these levels and it's approaching the top or the bottom, and that's a sensible way to do it, is wait for a little breakout. And it relates to the 5 minutes here, look, again, to where that demand zone is. So again, there's many different ways you can scalp using this, but it depends which you like the look of, and pick a system, a technique rather, that relates to you. That's what it's all about. Find something that sits comfortable with you, so you're not chopping and changing all the time. I'm always adding things because I'm always trying to look for something better all the time, but the basis of how I scalp is always the same, and very much fundamental led, so that I know I've got some kind of push in one direction thanks to the news or the opens, So cheeky buy signal here, look, trying to form. You can see it painting. This is on dollar again. See, it hasn't stuck.
Which means you've got to be ultra diversified. You've got to, really take advantage of where the bond market is right now. We believe that the bond market.
So that's kind of the zone you want to be looking at, because it's a good half an hour before. If you're using the 1 minute, you want to be kind of doing a breakout zone and half an hour time period, so you can see a tight range here. Look, that isn't influenced by any news that comes out at 1 hour before the open. Just stick it across.
And we're seeing it, in various sectors, in various geographies, especially with the dollar, and multinationals are very interesting to us right now. We're seeing it by factors, exposure, so we're not growth or value. So we're just, to pick our spots, but there are opportunities in this market. We're just going to have to be patient.
Talking about some of the consumer-facing internationals, multinationals, there have been a string of beats headlining third-quarter results in the past 24 hours, including some of those multinationals like Procter & Gamble. We also got Netflix and Nestle. For more, let's bring in Bloomberg's Taylor Briggs. Taylor.
Yeah, Lisa, I mean, for the most part, it has been a little bit better than expected. Some of this could just be the lowered, again, expectations coming into this. But when you think about the numbers, we're still looking at about 2% growth on earnings.
Make sure I'm logged in as well. Yes, indeed.
For both the sales and the earnings, it is coming a little bit ahead. And you also highlight 9% sales growth on a year-over-year basis, highlighting some of that price pressure, of course, that some of these companies are able to pass on through to the consumer. I want to caution, it is very early days. There's still a long ways to go in this season, but so far, here's how we're thinking about things by sector. You mentioned Netflix, a huge blowout yesterday. Communications has actually been a little bit of a laggard in terms of where we are versus estimates, expectations. But down at the bottom, you can see some of the big sort of outperformers have been discretionary. It's been industrials. And then, of course, there's been some of the utilities as well that are doing okay as long as bond yields stable out here. I think at the beginning, Lisa, I mentioned where we are relative to expectations, because all of this is sort of the positioning coming into the earnings season. We are now looking at 19 straight weeks of earnings revisions lower. So if you set a bar low enough, you're bound to beat it, I suppose.
Taylor Riggs, thank you so much. Lisa Shallett and Tony DeSpirito still with us. Tony, what's your take in terms of what the signal is to get from earnings, especially given the fact that you've got the likes of Goldman Sachs saying we haven't priced in recession, there's further downside to go. A lot of people seem to agree, and yet we're not seeing it now. We're going to possibly see it at another time.
Yeah, so I think the thing to do as investors is to both be positioned for resiliency as well as try to be offensive in unique ways. So, for example, I think of a barbell strategy between cyclicality and stability. And I think you can add value there on both sides. For instance, on the stability side, you talked about utilities earlier. I think healthcare is a way better way of getting stability than utilities. Utilities and staples are very expensive for what they are. They have premiums of roughly 20% versus the market. Historically, that's not been a good time to invest in those sectors. On the flip side, healthcare is trading at a discount to the S&P 500, despite the fact that earnings resiliency for healthcare has shown to be extremely good in periods of recession. So you got earning resiliency and valuation. That's in the fund I run, the equity dividend fund, that is the single largest overweight, for example. And so I think that's a way that you can be aggressive in your portfolio, for example.
Tony, I'd love to go a little existential. I mean, we're talking about this, Lisa talking about how some of the rate structure hasn't been fully realized in equities just yet. And we've been talking with people about how we have not seen the highs yet, and we have not seen where we end up. We are not going back to 0% rates. Where do you think that we're going to see the biggest pain in the equity structure, and can equities still be as value driven as they have been in the past with that kind of rate structure?
Yeah, so we run a model, an equity risk premium model, which is basically a stocks versus bonds model. And if you look at it, actually, so this is where I would disagree with Lisa. I do think the equity markets have priced in current rates. Based on our model, the equity risk premium is smaller than it was at the beginning of the year, but it's still larger than historical averages. The margin of safety there is rates could increase another 70 basis points on the 10-year before that would flip to, say, buy bonds over stocks. And so that's what we're seeing. The other thing that we're seeing that's kind of interesting is growth versus value. Growth valuations have come down pretty dramatically this year. They're now at a normal level, so they've corrected. Yet the valuations of value stocks are still really low PE multiples. And one of the insights I think there is for asset allocators that we wrote about in our latest quarterly is barbelling growth and value is better than buying the stocks in the middle.
Slow that range and you can kind of just move it to extend it. Obviously that was a false break. You wouldn't have taken that trade anyway, because like I say, looking at the chart, look, the hanking is right in the middle. You only want to be taking a trade when it's either in the overbought or oversold zone, as we know.
No, I mean, we look at the equity risk premium a little bit differently, and we think that, this has been a market where equity risk premiums have actually been below average given.
And the same as on the 5, just ranging along. So it's good to see this, because at least you know what not to trade, and it's when you have a setup like this, you just sit on your hands. Usually I'd be doing something now, then wait till I get an alert, but obviously I'm doing the YouTube, so I'm sat here watching, which is what you wouldn't usually do. You just set an alert and wait for price to a candle to close inside an overbought or oversold zone is ideally the best way, or for RSI to hit the green or the red. We know when it comes out the zone, look, red is a sell every time, look, comes out there, 1, 2, 3, doesn't do it there, then when it comes out the top, there, 1, look, it's a buy. Could have bought that one maybe if you saw that pop out, So that's what I look for, is the RSI crossing the 40 or the 60 as well. Ignore the center line really. And then I'm waiting for a re-entry once it hits 75 or 25, and then looking for the reversal. So again, you can just take that, or the RSI we've got on our X trading system, and use that.
Prosecutors believe there is sufficient evidence to charge Trump. The path to an actual indictment is a little bit less clear, timing, politics. And Lisa, this is not necessarily new, but it seems as though maybe they have a bit more evidence in this direction around the mishandling of those classified records.
Nothing really happening on that. Cable, same.
And it's not likely anything will happen, I guess.
This is where you've got to just sit tight, not get bored, not be tempted to take a trade that isn't there.
This could happen by the end of the year.
Abby, thank you so much. Coming up,
On the calendar front, that's it for today. There's no news unless you're going to trade gas and oil, which obviously we can't do with a small account, so we'll be leaving those alone. And then there's a bit of a Fed speech later on, might be interesting. Again, we'll leave those all alone. Tomorrow looks a little bit better news-wise. We've got Euro German PPI before the market open, and then we've basically, it's just the usual jobless claims. Continuing jobless claims is what we look at, and also the homes news as well, which will be kind of related to what happened today. So again, not too much on the news tomorrow. And then Friday, we're going to finish the week off with just UK retail sales. Again, it's really a flat week this week in terms of news. It's more earnings on stocks than anything else, but you can see there's nothing really here. I don't scalp, the pound or the UK 100 or anything like that, so just leave that alone. But this could impact the move of cable for the open an hour later. That's all I'd look for. So really, today's news and the jobless claims tomorrow, that's it. So apart from the open, so like I say, I will be doing some live streams, hopefully starting next week at the end of New York session. So kind of 8:30, 8 PM UK time. Just to try and see if it's the same as what we're doing now, or there's a few little scalps you can get just before the market close. So there's the open, just waiting for that. I'm just going to answer some emails while we watch price action on here. And the more you watch, the more you learn, simple as.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Honest about the mistakes I've made. But what I don't apologise for is the fact that we have helped households through this winter, through the energy price guarantee, the fact that we've reversed the national insurance rise, and the fact we are taking action to get our railway...
Brutal PMQs where she was accused, Liz Truss, of not being able to keep her word for more than a week and not really being the true leader of the United Kingdom. UK inflation hitting a 40-year high again, adding yet more pressure on policymakers to act, even as markets remain on edge with all the political back and forth. This coming as investors look for an FX intervention over in Japan as the yen hits a 32-year low against the dollar. Team coverage starting right now. Let's start with Lizzie Burden in Westminster. Can we just get a sense of how controversial those PMQs were and where that leaves Liz Truss's prime ministership?
Well, I was speaking to a Tory MP after this session of Prime Minister's questions, and he said at least she turned up, which shows just how low the bar was for this performance. The big surprise was that she said she's committed to the triple lock on pensions, which guarantees that pensions will rise with the highest of earnings inflation, or 2.5%. It was a big surprise. It surprised the newspaper editors who'd been briefed that they were going to drop this commitment, or at least that it was under threat. It makes a fool of newspaper editors when she needs them on side. It makes a fool of the ministers who were briefing it, and it makes her Chancellor's job even harder because he's going to have to plug that £40 billion hole in the public finances somehow else.
Yep.
It raises the question of whether she'll raise benefits in line with inflation, because Hunt has said that he's going to protect the most vulnerable. And as you say, we've now got back to double-digit inflation, so there is huge pressure on him to help them out. It really smacks of incompetence. Very, very weird decision.
And meanwhile, people are looking for the Bank of England to make a bold move to try to counteract some of the inflation on the other side, possibly creating more disruption. Meanwhile, over in Japan, yet more potential policy turmoil. The speculation of this has been running for a long time. However, we are reaching levels that become unsustainable, certainly for policymakers, certainly the speed at which the yen has been weakening. Damian Sassower here for more. What do you think is the threshold for some sort of intervention as we see the yen bump up or down, I should say, against 150 with the dollar really strengthening?
Well, Lisa, you just hit the nail on the head. It's all about the speed of the move. That's all that matters, right? I mean, you can continue on with yield curve control in Japan. You can even change from the 10-year to the 5-year as a target, or even move the band a little bit wider. But at the end of the day, it's all about the fact that Japan has plenty of reserves, and they're willing to defend their currency as far as it will go. Well, we'll see about the speed, and we'll see how it goes. What I'm most focused on is the broader Asian region, because what you're seeing is FX reserves globally are down 8% year to date, a lot of it due to the dollar strength relative to the developed market peers. But I mean, my goodness, you're seeing reserves get pummeled, and in places like Indonesia, Malaysia, the Philippines, they're already engaging in all forms of intervention, Operation Twist. You hear people on the tape each and every day. So it's not just relegated to Japan or the UK, it's expanding to the whole of EM as well.
All right, Damian Sassower, Lizzie Burden, to both of you, thank you so much. Still with us, Tony DeSpirito and Lisa Shallett. And Tony, at what point does the rest of the world's problems become the U.S. problems?
Yeah, so I mean, the rest of the world problems have been mostly caused by the strength in the dollar. And so I don't think it works that way. Usually it works the other way. US's problems become the world problems. And so I'm not super concerned, but I'm watchful. Watchful of market dislocations like what we saw in the UK. And certainly when you think about what could cause a Fed pivot, these are things that are on the list.
Lisa, we were talking about multinationals being a potential opportunity. Where is that versus a potential liability given some of the foreign sales at a time of dollar strength?
Yeah, look, I mean, I think this is one of the conundrums at the minute, which is, for U.S. companies right now, the strength in the dollar has gone from, a non-factor to a negative factor. For the U.S. economy as a whole, however, the very strong dollar has actually, believe it or not, kept a lid on inflation given the percentage of our economy and our consumption that we import. And so one of the interesting dynamics here is whether or not the U.S. dollar at some point in 2023, when that potential Fed pause or pivot comes, does that weakening dollar then actually become a liability for the Fed because it's very destabilizing vis-a-vis declining inflation. So these are really complex cross currents. We're seeing extremes in this cycle in terms of U.S. dollar strength, not versus emerging markets, which we very often see. Emerging markets actually on the whole have been resilient and have held up. But we're seeing these devastating discontinuities, but with our key trading partners like the UK, like Europe, and like Japan.
Lisa,
destabilizing.
How focused on the U.S. are you in terms of your investment portfolio? I mean, are you basically completely overweight, hiding out in the U.S., or are you starting to dabble in some of those emerging markets or even the United Kingdom?
We absolutely are dabbling. We think that there are some very, very good value opportunities. We're leading with EM right now in terms of our interests, but we're, again, as I noted, we're scrambling through and searching through the wreckage for those multinationals in Japan, in Europe, in the UK who are going to make hay on a global competitive basis with their currencies where they are.
Tony, final word on this point?
Yeah, so I run a large cap U.S. value fund, but as part of that, we look at multinationals in other geographies because they're competitors to the U.S. companies we're looking at. Right now, I've got about 20% of the portfolio in non-U.S. companies. They're all multinationals. You know, a lot of companies in energy or pharmaceuticals, what we're finding is a headquarter discount, so very similar business models. I'll take energy, for example, the U.S. integrateds versus the European integrateds. There's a huge multiple gap there, with the European integrateds being almost half the multiple of the US, but you look at the business mix, incredibly similar. So that's a better deal, and so that's when we'll stray outside the US to get that better deal. Energy is an example. Also pharmaceuticals, that's the other place where we're seeing opportunities outside of the US.
Lisa Shallett, Tony DeSpirito, thank you so much. Fascinating about international, multinational companies outside of the U.S. Coming up, the morning calls, and later Invesco's Kevin Holt looking for earnings estimates to keep coming down. He and a lot of others, he'll be joining us around the opening bell.
If you're using useless retail trading charts like this,
yeah,
right now, that softness hanging in there around 6.
All right, 5 minutes to go. Let's get ready. All right, let's set up.
The satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem.
The risk of a collision is a lot higher now, just because we've installed so much more hardware.
Just making sure I'm logged in. Yeah, logged in on US-30 this time. So you can go in on DAX as well, which you did yesterday, but we'll see what move we get. Look, we're just right against this. So is it going to break to go higher on the open? We've got a potential 20 pips to the upside, and we're going to get a pullback. So 1 minute's not doing anything. 5 minutes gone a little bit bearish, bullish. Sorry, but again, it's in no man's land at the moment. So this move, the open, hopefully we'll get things going. Cable's pretty much where it was.
Countdown to the open begins. I'm Lisa Abramowitz in for Jonathan Ferry.
3 minutes to go.
Yields surging past 4.5% on the 2-year, and you see stocks lower.
Got a nice rejection on the 1 minute. You see, beautiful. Because we're right on that zone. Look, here's our supply and demand zone. As you can see, nice resistance. If price breaks above that, we know people here are gathering buys. That's what it's all about. We'll get back to up here. I'm going to put a line on that actually. Top of there, look.
Pointing to the company's impressive quarterly results, they didn't at least fail. That was where the bar was at, and they surpassed. Coming up, big tech earnings kicking off. Invesco's Kevin Holt expecting higher inflation to mean lower tech stocks.
If you zoomed out, there's the TP overall to get back to that level here. Look. So, just in case we do get a nice little rally, even though the markets are saying it's over. Right, it's going to take the line off. Good luck, everybody. And again, this is for pure fun. I'm laughing, I'm smiling, you can see. That's a nice break. 10 seconds, but again, we're still not there yet. We've got 1 minute to go. So not entering into any trades, not being suckered in.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
So 30 seconds to go. Good luck, everybody.
We've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
10 seconds. Let's get ready. 4, 3, 2, 1. Good luck, everybody. Let's see what we're going to get.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Brilliant. We got in and out of there, and we got $15. Fantastic. And that's what we wanted. $15 on that. Quick on that buy. Let's see if we get another shot at it. Let's see what's going to happen here. Look at that push up. Beautiful. Nice little move on the upside. Let's push up on the open and see if it's going to hit a bit of resistance.
Bloomberg Technology with Emily Chan. Weekdays at 5 p.m. in New York.
Brilliant. Yay. We got that nice little pullback. Brilliant. That was $20 there. Amazing. Just waited for that to hit that resistance on the 5 minute, as you can see there, and I just jumped in. I got the buy on the initial, and I got this little pullback here on the sell as well. So that was good. Let's post my results. Small trades, because like I say, I'm dealing with a small account here, but all in all, that was a nice win. Remember, this is just a couple of $100, so you know, risky because I'm on US-30, but I just jumped in and out, caught that pullback. Now it's pushing up. Look on the 1 minute, so you can either look to take that, or what I'd be doing is waiting for another reversal on this.
Joining us now with a look at the stocks moving at the opening bell. Well, Lisa, we are looking at our first down day in a few days, and not surprisingly, as you were just
down day, as we see it rising on the 1 minute. I love it. That's what I love about this.
Right now down 1.2%. Valuation more of a concern when yields rise, that repricing of risk. JP Morgan Chase banks also
let's watch this. Look,
getting a bid, even though yields are higher. That's been the story.
so it's way outside the bands here, so we really want to try and catch a good reversal if we can.
Lows. Plus, that stock's been up a lot in recent days off of that good quarter, and maybe it's going to flip right now. Spirit Airlines up 2.2% on the news.
20 seconds left on this candle.
Have backed a $3.8 billion purchase by JetBlue. Of course, there's been this back and forth between JetBlue and Frontier, but right now it does appear that shareholders are approving this deal with JetBlue, and they expect this deal to close no later than the first
382 on the fib on the 5 minute.
So let's see what else happens in this story. And then finally, Netflix heading to its best day since January of this year on a monster quarter. Growth is returning, and they're looking at a forecast of 4.5 million.
Still pushing nicely up.
For the fourth quarter, and that is really helping the stock out in a big way on the daily.
Yeah, look at that. Beautiful. Nice buy. 305, 4. Look at that push up. Beautiful. All the way up.
Shrinking quarters. So that's the big feeling of we're back to the positivity.
It's on resistance at that middle point.
You know, as we've explained. So that's not going to go away. But other than that, all the stars are lining up very well for us.
Reed Hastings taking it religious. Bloomberg's Ed Ludlow joining us now for more. Ed.
Yeah, 2.41 million subscribers in the quarter, double what they had forecast. 4.5 million new net subscribers come.
Just wait and see if we get another trade on this.
The street likes the story. They like the visibility on the growth trajectory. They like the idea that an ad-supported tier comes this November. They like the idea that password sharing will be charged as of next year. There are headwinds still, though. They spoke about the stronger dollar, right? That's going to mean a $1 billion hit to revenue.
Nothing yet.
$100 million hit to profit.
Just waiting for another sell.
The street's still bullish because they believe that an ad
Those candles on the hacking, beautiful. With green, green, green. Like I say, I can go with the trend, but I've already scalped it. But I really want a pushback.
Which help to drive growth. They're also strong in markets like
Let's see if it's going to go to that 618.
Interestingly, despite the guidance for the fourth quarter, they are going to suspend.
Just watching the 5 minute.
This is a company where executives
20 seconds on this candle.
Saying, please stop getting so obsessed about
it's going to push up again. It's pumping up again.
Financial metrics in the quarter, a beat on the top and bottom line, but again, take into account that stronger dollar. We knew this
getting ready.
Would have a factor, and it has done so for Netflix.
Ed Ludlow, thank you.
5 seconds on this. 5 seconds left.
Clock and earnings beat. Joining the ranks of Procter & Gamble and Netflix, as we were just talking about, and Nestle. Bloomberg's Taylor Riggs is back with us for more. We were just speaking with Scott Kirby of United. What's the latest?
You know, wild, Lisa. 4:30 yesterday after the closing bell, we get comments from United Airlines saying that the COVID recovery trend will really overcome any recessionary fears. And for me, that is the statement. And then, of course, when they come out and they say that the fourth quarter adjusted operating margins will also exceed 2019.
Let's have a nice push down.
Power amidst some of the capacity declines and the strength of United Airlines. Let's talk about some of the inflationary pressures with some of the other big earnings, of course, that we're getting. Also this morning, Procter & Gamble, one of them, like Netflix, highlighting the strength of that dollar. You know that the pressure that puts on overseas revenue in a different currency, and when you translate onto a dollar-based balance sheet, then the pressure that
just waiting to see if we're going to get a push down.
Facing a similar story of 4% currency headwind there, but otherwise sales looking about $19 billion for the full year. Intuitive Surgical is an interesting one, also raising that full year growth to 17 to 18%. Previous estimates had been around 15%, and a lot of analysts are seeing some strength within hospitals, still spending on some of these. Abbott, of course, is just a decliner as well, looking at some decline in revenue and profit after those baby formula shortages. But overall, Lisa, it has been a relatively good season here so far.
And the bar had been pretty low, and people initially were pretty happy with it, although we'll see whether yields continue to erode that. Taylor Riggs,
let's see if it's going to bounce off that.
Third quarter results, as we've been talking about, P&G, Netflix, Adobe, all warning
618.
side effects. Let's bring in more with Kaylee Lyons. Kaylee.
Well, Lisa, Taylor was just talking about P&G, where you're definitely seeing this showing up. They're saying their full year profit is going to be at the lower end of the forecast. They talked about a number of different headwinds. One of them.
Nothing yet. Still waiting. Look at the extension from the zone. Brilliant. That's why I said look back up to where it was.
In sales for the fiscal first quarter, you also have, of course, the pricing issue. They're facing higher input costs, but what that means is they are passing those higher costs on. Pricing up 9% in the quarter. So overall, that led to organic revenue growth of about 7 percentage points. That is, of course, the inflation issue coming through. To get back to the dollar, though, P&G not the only one warning about this, as you said. We've heard it from Netflix too. Ed mentioned it. That's part of the reason the sales forecast came up short. But the list is much longer than that. Basically, every multinational company is going to face this in some shape or form.
Nice drop.
Said all the money you make overseas in weaker currencies is worth a lot less.
Waiting again for another confirmation.
With high international sales exposure underperforming those with low international exposure. And as for what those companies are, a lot of them are technology companies. If you look at the international revenue exposure as a percentage of revenue for sectors in the S&P 500, it's 52% for technology. Of course, we're going to get a lot of those big tech names reporting results next week, so watch out for that dollar keyword. And you have materials and communication as well as staples and financial, which of course we've already been hearing from.
Kaylee Lyons, thank you so much. Right now, joining us, Invesco's Kevin Holt, who sees further downside in stocks as an opportunity, writing, quote, stocks are likely to see continued valuation
brilliant.
And earnings estimates will need to come down. We
got a couple of nice trades on that one. And that's left us on 50, so that's brilliant. Took that pullback. So that's 58 at 10, so that is going to be
levels of earnings.
That's 25% on the account today, so well happy with that. And let's have a look, see if we're going to get more pullback here. Let's have a look at this move. It's rejection.
I think as we get further into the earnings reporting season, you're going to see more stress. You can see from P&G results, which you guys just talked about, there's going to be a lot of pressure on the consumer. And is that
so that's great. I mean, we're talking, yeah, most people can't even do 10% in a month. So when this is a small account, I'm trying to be really accurate. Just waited for that little dip and jumped in on the pullback there. Now I'm going to not risk it because that's the open done. Usually just a few minutes after, once it gets 10-15 minutes, now you've got to start trading on the Heikin-Ashi. So you want to wait now for a red Heikin-Ashi candle to come in before we get another sell.
About liking multinational companies outside the U.S. who could actually have the reverse kind of effect of some of the multinationals in the U.S. that are seeing the dollar.
So let's just keep an eye on this.
And having it actually be a tailwind. Do you have a similar kind of perspective as you try to invest in something, preparing ahead for perhaps a better opportunity to buy?
Yeah, so we don't, I mean, having a 5-year time horizon, which is a little bit longer than probably most investors, we don't really, we look at currency probably as more transient. With a lot of the geopolitical issues we have going on right now, I think the dollar is artificially strong. Could these geopolitical issues continue on indefinitely? Possibly, but I think that's unlikely. So we view the dollar as being, extremely high, being a transient issue, and we're not really letting that affect our investment decisions.
With a 5-year time horizon, Kevin, how do you game out where we're going with the benchmark rate and the valuation prospect longer term for really where these valuations ought to be on the equity side?
Yeah, so we are using history, and it is difficult when we haven't, most of us have not been through an up interest rate cycle. So I think you have to look at the normal multiple historically is 15, 16 times, and that's kind of where my 3,000, 3,400 come out in terms of earnings are coming down from probably about 250 expectations for 23 to that 210 to probably 220 level for next year. So that makes me think that we'll kind of bottom out around there. With that said, I think a lot of the inflation issues in terms of oil, I don't think oil is going to get better. I don't think it's going to get a lot worse. I think food, as soon as we can rectify some of the situations or hopefully the Ukraine-Russia situation resolves itself.
Nice pullback. Look at that drop, beautiful.
Probably a little more difficult. That's probably a 1 to 2 year time horizon.
All the way back to where it was for the open.
I think we still go back to a positive backdrop. I'd be very constructive on a 3 to 5 year basis right now. It's just the next 6 to 9 months that I think are a little tricky.
We're going to continue the conversation coming up. Invesco's Kevin Holt will be sticking with
brilliant. Yay, we jumped in there. We've got another cheeky $5, $6, $7. Remember, I'm only trading with a $200 account and we're already up $62 today. So there you go, and that's what it's all about. It's got nothing to do with the amount, it really is the percentage, and also it's the fact that if you can scalp like this, which is hard by any shake of the stick, like I said, I tell everyone really you want 1,000 minimum, 1,500 ideally, but I get asked to do another small account kind of challenge again, and that's what I've been doing. So I took a loss there, one loss of $3.99 and one loss of $6.21, but overall we've done well. That was a nice little session there. I'm just going to post that. You're going to take the losses. Started with 100 yesterday, bumped it up to 200. There you go. So happy with that. Just shows it can be done, but you just can't just randomly trade. You've really got to be more precise. And like I say, I would just got in a couple of trades on the open. Red Heikin-Ashi after a nice burn, on the upside. We just got in on this sell here. And obviously looking at the 5 minute, the trend is still green and green and green. So your counter trend, this is a pullback. Now we're getting a sell signal, which the sell signal you can relate to where price action is now if it sticks, and then we're coming down lower. So what goes up must come down. Look, I mean, it's just gonna, is it gonna just go back to where it was? Who knows?
And technology in them is also helping to pull down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's HERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at HERS, or a thermal energy recovery.
So now, you know, the sell is kind of over because it just hasn't pulled down. You want to be taking a buy. Well, again, use the zones. Just use the zones every single time. You know, that's the way to do it.
So while F1 may have a reputation as a
Again, the moment's so extremely volatile, but there's enough momentum in the opens and the news events to do what we need to do. So that's it for US-30, unless I get an alert that price is going to be on the 1 minute ray down here and back up again. I'm not going to attempt that. Like I said, I've got 25% on my account. Don't want to mess with that. Once you're green, stay green. Don't be tempted. There's always tomorrow. Even it doesn't matter if it's a $100, $200 account or a 10,000. You've got to just try and think the same. Try and get the mentality there and the discipline not to trade. Sit, wait. We waited there. We got some nice trades away. When we're done, move on. That's the way you've got to do it. It's hard. It's hard to start off with because you want to trade everything all the time. And I've tried it, and you end up just giving it all back. Nice move on here, but let's have a look at cable because that's up next. 15 minutes for those of you who've got a bigger account. Again, like I said, we took 10-11 pips this morning, and now we're coming up to our line here, and again we're looking for a nice cheeky buy back up to that 112 level. And again, I'll probably have a go on this and use the smallest lot size, and I'll show the results in my group as well. $25% up is what we achieved, and that's what we wanted. So 10% would have been great. So we'll reset, and like I say, there's not really any news later on. Obviously can't trade the gas and oil and these speeches. I'm just going to leave alone. If we could try and build the account up a little bit, then we might do. Or I might just take it and buy a nice bottle of wine. Treat yourself, especially when you've been stressed from trading. It's meant to be fun. It is fun, but also, you've got to try and control that stress level. And the way to do it is just wait for the perfect entry, if there is such a thing, or the higher probability trade. That's what we're all trying to achieve. So I'll post this into the group because here's the cable setup for everybody. Just switch. So yep, NY cable should be a buy. But it's fun, it's at least at the end of the day, if you've got 100 and you're risking to blow it and lose it, this is the best way to practice, way better than a demo. You know, just for the psychological aspect of it, you're always far better trading with a small live account than a big unachievable demo account which you learn nothing. So again, it's coming down nicely up, so you just got to wait for it to get back into that zone and you can look to take a buy again. The sell signal's stuck, look, as you can see, and if the RSI goes into that red, then you can look to take a sell as well. And that's for pound dollar, but we're looking for the buy. We really want the buy back on this, but again, you've got 10 minutes to wait. US-30, same look, all the way back down to where it was, just about, look. There was a sell signal. I jumped in and scalped that little move there, and now we'll just wait for it to bounce back out of the green zone on the 1 minute, and if the 5 minute is in the center, then that's a good confirmation. So it's just waiting for the extremes to be reached. It's no guarantee that it's not just going to continue like it did here. We're waiting. That's what my little losses were. I took a couple of cheeky sells here and seeing that price action candle, but it got rejected, took the losses, and then it came back to me. So that's what you got to do, just cut those losses as soon as you think, okay, it's not, and then obviously it pulled back. Once the volume gets above here, and then we're seeing these candles get smaller, then's the time to sell. As you can see, look, bang. Right, that's it. Just a quick live stream, because again, like I said, when you've got a small account, you just want to be in at the right times, market opens, news events, and then leave it alone. Don't be tempted to dip in and out, and that's how you start chipping away at your account. So it's just that discipline. Doesn't matter what happens, you've come away green for the day, and you know, you live to fight another day. So that's 2 green days in a row, and want to go again tomorrow. So that's the way to do it. So again, thank you all for joining me. Watch this back, hope you learned something from it, and we'll do some more again after the weekend. So until then, I'll see all my guys in the trading group, and we'll see you next time. Trade safe, take care.